Today we are going to start chapter 3. It's all about money and credit. What exactly is money? You know money as rupees, or you know that the rupees can be divided into paise. In some countries they know money as dollars. In some places it is euros, or maybe even dinar. So different countries have different types of money. Now basically money is what money does. That means it is a medium of exchange. You can give money and buy whatever you want. So what exactly is money? Let us see that. First, we see that money is a medium of exchange. So we see that now we have what is known as money. In the olden days, what did they do? They had what is known as barter exchange. Barter exchange means it is an exchange of goods. Or it can also be services. For example, if I teach your child and you make food for my child, okay, you pack the tiffin every day for my child. So what you are giving may not be something, or you might call that a product. It might be something because you are spending money to buy the food material. And what I am giving, I am not spending any money to buy anything, but I am teaching your child, so I am giving a service. Or maybe I am stitching clothes for you and you are giving me one pot of rice. So you have given me something and I might give you something else. That was in the olden days, they had barter exchange. They did not have what is officially known as money. Now what was the problem in the exchange of goods and services? The problems of barter exchange, okay, let us see the problems. First, no double coincidence of wants. Of course, if there is a coincidence of wants, that means I have eggs for selling. You have milk which you want to sell. I do want your milk, but you are not non-vegetarian. You don't eat eggs. So you don't want the eggs that I want to sell. So maybe you don't want my eggs and you want his wheat, but he doesn't want milk. So sometimes it can happen that what I want to sell you don't want, or maybe I want to sell this but I don't want what you have to sell. So double coincidence of wants was necessary for the exchange of goods. And if that did not happen, then there would be a problem. Now, second problem, divisibility. It needed to be divisible. Suppose I want to sell a cow and you have a goat to sell. Now, should I think of 3 goats equal to 1 cow? Or should I cut my cow into 3 parts and give you 1/3 cow so that I feel, okay, we have made an equal exchange? So that could be another problem. Now with money, I can divide it into how much ever I want. I don't want to buy a kilo. So if it is 10 rupees a kilo and I want only half kilo, I can pay 5 rupees a kilo. I want only 100 grams, so I can pay 1 rupee and I can buy 100 grams of that material, whatever I want to buy. So there is divisibility now with money, and with exchange of goods there was no proper divisibility. Third problem was portability. That means ability to carry things. Now if I want to go to Delhi and I want to pay for the hotel that I am staying in, I don't have to carry one cow along that I give as payment, or I will give the milk of the cow as payment in Delhi. I can carry money and it's very easy to carry. So that is one more problem that was there in exchange of goods. Other problem was perishability. Perishability means things that spoil, nashwar. The milk will spoil. I can't store it and keep. So perishability or no storage. So it did not have the ability to be stored. So because of all these problems, we stopped barter exchange and we started what is known as money economy. Okay, so now we start with a money economy. Now how will money make it easier? First thing, this problem will not be there. Now suppose he doesn't want to buy my eggs. So he will sell me the milk and I will pay him money. Money of course he wants. Money he can keep in the cupboard, it can remain, it has storage value. Or if he wants to buy medicine with that, he wants to buy something else with it, he can always buy. Second problem of divisibility is also solved. With money, as I told you, we can divide it into half, quarter, 1/8, how much ever you want, you can divide it. Portability, it's easy to carry money. Of course, it's lighter to carry notes than carrying coins. If you have a large amount to carry, so you can carry big notes, that means 1000 rupee notes, instead of carrying totally in change, because otherwise you'll be carrying one big bag of change. So that problem is also solved. Money is not as perishable. Of course, notes can tear and coins have more durability. Opposite of perishability will be durability. And money can be stored also. So goods and all services couldn't be stored. So now we understood that what is the use of money. Now money, when we talk about modern times, the first type of money that we have is currency. Okay, so money, you can have currency. Now here we have rupee notes. So sometimes in some places you may have rupees, in some places you have pounds, in some places you have dollars, or you have the euros. Okay, so whichever may be your currency, generally these are the internationally accepted currencies. Rupee is useful only in India. In Pakistan they have their own rupee. In different places they have their own currency. Each country has a central bank and the central bank normally prints this money. We of course have the RBI, Reserve Bank of India, which is the central bank which prints the notes. Only the 1 rupee notes and the coins are minted by the government of India. But they are distributed by the RBI. Okay, so you understood what is currency. Currency is what you actually use. Now that is the first way that you have money. If I have to pay you and I give you rupees, you will accept it. That's the most acceptable form. Now the second form of money could be when we have deposits with banks. We have a saving account. If you're a businessman, maybe you have a current account. In a current account, you don't get much interest or you get zero interest, but you get the facility of getting overdraft. So you might have a current account. Or sometimes we keep fixed deposit in the bank. Now if I have kept fixed deposit, it's locked for a certain period because my money will be given by the bank to someone else as a loan. Now I have a savings bank account. I'm not carrying cash with me. But if I have to pay you, I can pay you by check. Okay, so with my deposit, I can make payment by check. Now, if you've seen a check, I will say pay so and so. So I can put your name over there and rupees or the amount, this will be in words, and here it will be in numbers. So here if I have put 1000 rupees that I have to pay to you, I will write here 1000. And I have to pay you, Mr. Puneet. Okay, so Mr. Puneet Shah. Okay. So pay Mr. Puneet Shah 1000 rupees. Here will be my signature and Here you will find the check number which is given. Okay, so this is a very important number. Now I don't want this to fall in the wrong hands. So I will put account payee, or I will cross the check. So it will go directly into your account. Or over here Mr. Puneet Shah, or the bearer might be written here. Bearer check, anyone who has it in his hand, that means you have not put in the name, that person can put it into his account. So to be on the safe side, we put the name, we make it account pay. So from my account, it will go into your account. You're perfectly okay with it. You don't mind being paid in currency. I have paid you in actual rupees, or I have paid you by check. So that is also one mode of payment. So you don't mind if I pay you by check. Now in your book, they have given you a check of a particular bank. Doesn't matter if I have an account in a different bank and you have an account in a different bank. Even then, from my bank account, it will get transferred into your bank account. So that is one method, one more method of payment. Now there is a third method which hasn't been given here, and that is plastic money. Plastic money, or what we call credit or debit cards. Now what is the difference between a credit card and a debit card? You might have seen a card. Now the debit card, as soon as you pay with it, when you swipe your debit card, the amount will go from your account into their account immediately. That means it will get minused from your account. It will get debited. Credit account. Now the meaning of credit is actually like loan or udhar. So credit account, it will get cut from your amount in the bank the next month. So you still have a period to pay it. People always say that if you are not very, the kind who saves money and all, then it's better if you have a debit card. Because on credit, you might buy something even though you don't have the money. And you think doesn't matter, next month I will get my salary and I will pay from that. So you might use your credit card and you might get into a credit debt. Debt means D-E-B-T, but the B is silent. Debt means karza. Okay, so it's easier if you are the kind who saves. Credit card has its own benefits. Sometimes we urgently need to spend for something and we don't have the money in the bank right now. But we know that next month we will have, because we will be depositing something or our salary will come in. So of course credit card is also very useful. So now a lot of people are using plastic money so that they don't have to carry a lot of money. When you're traveling, we can also have traveler's checks, which of course again is not given here. But nowadays, because people have credit card, very few carry traveler's checks. Traveler's checks cannot be used by somebody else because it needs your signature. Same way with debit card and credit card. Most people cannot do foul play with it. But if you have dropped your money, it's fallen somewhere, someone has stolen it and they can use it. If someone has stolen your debit card or credit card, you can block your card. If your checkbook is lost, or maybe you had already signed and given a check to someone, it was a blank check, the name had not been put over here, then you can ring the bank and ask them to block the check. Okay, so these are very safe ways of making payment. And of course, with money or currency, everyone is ready to accept it. So these are the different ways that you will get paid or you can make payment. Now this money, you can see that credit or loan that we take from the bank. Okay, there are two reasons now, different reasons given in your book, for example. One is given as festival season and other is Swapna's problem. Now what do we mean by festival season? During the time of Diwali, normally lot of business people get lot of orders. People are going to buy lamps, they're going to buy crackers, they're going to buy clothes, they're going to buy jewelry. So they want to make lots of sales at that time. Now suppose I am a garment manufacturer or anything that normally sells at Diwali time. If I want to take a loan from the bank because I have got a big order, lots of people want to buy new clothes and I want to supply the clothes, but I need the money to buy the raw material. Now that raw material, I might need to take a loan from the bank. Okay, so one, I have taken money from the bank because I want to do some business. I've already got the order, so I don't have any risk. I don't have to worry, will those clothes get sold? So I have taken a loan from the bank. Suppose I have taken 10,000 from the bank. I have bought raw material and made the clothes and then sold it to the shop that gave me the order. Okay, I am the wholesaler, I am the supplier. So I have supplied it to the retailer and the retailer has paid me. I can pay back my loan to the bank. It's very easy. Now in the second case where they have shown you a poor woman, she needs little money to buy seeds, maybe manure, pesticides, because she wants to sow those seeds. She has sown the seeds. Unfortunately, maybe it doesn't rain and they dry up. Or the crop starts growing and then little pests start eating up the crops. Or sometimes you have a swarm of locusts that comes and eats up the crop. Now her entire crop has spoilt. How will she repay the loan? Sometimes she goes to the money lender or sahukar as we call them. They normally charge higher rate of interest and she takes money from him. So he says, why should I give you money? What do you have to show as security that you will pay it back? So she gives him the papers of her land. Now actually he hopes that she won't be able to pay back. Why? Because then he will take away her land. Very often in the villages it happens that people lose their land because they have kept their mortgage. That means what they have kept is their land or the papers of their land as mortgage. Mortgage, when we say girvi, that means they will say, what can you keep as security? Now sometimes even a bank might ask you, you might keep your gold as security and based on that you might get a loan. Most of the banks give loan based on your salary. They can see that you have the earning capacity. Okay, you have your salary slip, you have your appointment letter and they can see that every month you can pay back so much and based on that they might give you a loan. The amount of loan will also depend on the same thing. They will see your repayment capacity. If you can pay back only a small amount of loan will be given. If they can see you have repayment capacity where you can pay back big amounts, they might give you a bigger loan. You know something? People who really have money, they get even more loan. And people who don't and really need, why? Because they cannot show how they are going to repay it. They can't show repayment capacity. So sometimes the big industrialists might get big loans from the bank and poor people may not be able to get loans, and which is why they go to the money lender. Money lender very happily gives them loan. He charges higher rate of interest. Sometimes he might even write the wrong amount because sometimes they are illiterate. He will just take a thumbprint, their angutha chhap, and they put their thumbprint on an amount which they may not know. Or in front of them he might write 1000 and he might add a few zeros to it afterwards. So because of that, we have in India what is known as two sectors, okay, of loan. One is the organized sector and one is the unorganized sector. So you have the organized sector and the unorganized. Okay, so these are the two different sectors. Now, in these two sectors, which one do you have in the organized sector? Banks, okay, credit banks. And in the unorganized sector, you have the money lenders. In the village, very often you will find that they approach the money lender. One, because they can get it immediately. In the bank, you need to apply. They may not even know how to fill out the forms, or they can't read, they can't write, and they find it easier to go to the money lender. But we try to explain to people that it is better to go to the organized sector. The organized sector or the banks, the credit banks, will have a fixed rate of interest, which will be decided by the RBI. While the money lender, he will see the more needy you are, you need it urgently, he might charge very high rate of interest. You can get cheated here, but over here you don't get cheated. Okay, but yet you'll find in our villages, unfortunately, people go to money lenders. So a lot of rural banks are being made. These rural banks give loans. Whether you want to start your little poultry farm, you want to buy it for seeds, you need to buy a bullock, you need to buy maybe a tractor. So for all those different reasons, the banks give them loan on long-term basis. That means they have to pay it slowly in a long period of time. We also have housing loans. HDFC Bank started off as a bank which gave housing loans so that people can buy houses of their own. Now when you buy a house of your own, it's a good idea to take credit or take a loan even though you're paying a small amount of interest, because it's a very large amount. Once you have your house, you're no longer paying rent. The rent that you used to pay, instead you pay as EMI, and finally you'll have a house of your own. But when you take loans for unproductive purpose, now unproductive purpose because you want to celebrate a wedding or you want to give food to the whole village because you're celebrating something. So for those type of purpose, how will you get the money back to be able to repay? The person who took money as a loan because he wanted to buy raw material, once he sold his goods, it was easy for him to pay back. The farmer took loan because he wanted seeds or he wanted to buy a tractor or pesticides, fertilizers, etc. And once his crops grew, he was able to repay the loan. But if you take it for unproductive purposes, which very often they do, because of social constraints or because of some religious functions, and that becomes very difficult to pay back. Okay. Now here, if you see in your book, in the house loan section, what are the things that are given? What are the terms of credit? Okay. Now when they give here credit, what are the terms of credit? That means what are the terms on the basis of which they will give you credit? The first one that they have given is the loan amount. How much do you want? If the house costs 1 crore, maybe the bank will not give you a crore. They might give you only 50,000 or they might give you 50 lakhs depending on your repayment capacity. Okay. The second point which is given is the duration of the loan. So, amount of loan, is how much loan do you want. Second, the duration of loan, that means for which period do you want. Normally a housing loan is for a very large number of years. You can repay in 15 years, 20 years, slowly per month. They have a certain amount which is fixed, that is known as the EMI. Each month you have to pay a certain amount. In that, they have also incorporated the interest amount. That means if you have taken a certain amount, you will be paying back that amount and over and above the interest amount. Interest also is of two types. One is a fixed interest. Now suppose we have got a housing loan at 7% when we took our housing loan, and it remains constant at 7%. Now if the rate of interest has increased to 9%, those who had taken floating rate of interest will have to pay 9%, while we will continue to pay 7%. In general, rate of interest keeps on increasing for loans. Okay, so this is the second point. Next point is the documents required. Which papers are required? Now, if they are giving you loan on the basis of your repayment capacity, suppose you have a job, they will naturally want to see the letter where you are appointed, what your salary slip is. So, many of the papers that they might want, or maybe where exactly you live. At present, you might be living in your old house. So if you have a ration card, if you have your Aadhaar card, all these important documents also might be useful. So they will tell you which documents will be required or which papers you have to submit. The next one is the mode of repayment and the interest rate. So what is the interest rate? And mode. Mode means method. Okay, how are you going to pay it back? Mode of repayment. In a lot of places they take post-dated checks. Post-dated checks in the sense, for this year, if I have already given them 12 checks by putting next month's date and the month after that, and the amount is filled in. So then they don't have to worry, and they know that every month they already have the check with them, they will put it in. Or it might go directly from my loan account. So a separate account has been opened in which I keep depositing money, and time to time that amount has been cut by them from my account. So what is the mode of repayment that the bank will decide, and what is the interest rate? As I told you, you can have a flat rate of interest, or you can have what is known as the floating rate of interest, which keeps on changing. And the last point that we have, that is the collateral. Okay. Now collateral is what can you keep. Now suppose you are living in your old house, maybe you have kept the old house papers, that means the ownership papers, with the bank. You might have kept your gold with the bank, or maybe you have very good shares of a blue chip company and you might have kept that. Depending on what the bank accepts as collateral, that might be kept. So what are the terms of credit? We can just run through it again. The amount of loan that you take, that means how much amount you have taken. The duration. Now if I have taken it just to buy raw materials, I have not taken a very large amount, and I can pay it back in 3 months. 3 months credit is the norm, or that is normally accepted among most businesses. So within 3 months, I have sold my material which has been created for someone else, and then they have given me the payment and I can pay back. Documents which are required, they might ask for certain documents. The interest rate will be decided, whether it's 5% or 10% or 12%. The mode of repayment will be decided, and the collateral. Sometimes you might have traveled in a taxi and you might see over there on the taxi it is painted, hypothecated to some bank, because he might have bought the taxi and he's not a very rich person. He doesn't have any collateral to keep. So his collateral becomes the taxi itself. Once he starts earning from the taxi and he keeps repaying the bank, finally when he has fully repaid the bank, the taxi becomes his and the papers are transferred in his name. Similarly, if I am buying a house, I don't really have any collateral, so I can have the papers of that house kept with the bank. The bank has the right to take away that house because I was unable to make the repayment. Normally when banks give loans, they check everything so that in general they don't have a loss. Because why does a bank give loan? So that the bank can earn a certain amount. See, I have deposited money in the bank. We already saw that you have deposits with banks, right? Here we saw we deposit money with the banks. Now I have deposited money with the bank in my savings account, which I keep pulling out whenever I want. But if I have deposited in a fixed deposit for 3 years, 5 years, that money which I have deposited with the bank can be given to someone else as a loan. The bank is giving me 5% interest for my amount, or it's giving me 8% or whatever it might be, and it's charging the other person 10%. So if it is giving me 8% and charging 10%, that 2% interest will be what the bank earns. The bank naturally will give money to those people where they expect that the money will come back. Now in rural areas it works slightly differently, because it is not only for profit, it's also to help the economy. Because if they don't give loans to the farmers, they won't be able to buy seeds, they won't be able to have crops, and the economy will not grow. So in the rural areas, they try to encourage people to not go to the money lender, go to the regular credit banks, special rural banks like NABARD, and then the farmer will also benefit from it, and it's not only for the benefit of the bank. Okay. Now, you understood what are the terms of credit. Now, variety of arrangements can be done for credit. Suppose you want some loan. Sometimes you might go to a relative and ask him for loan. Now, he may not charge you interest at all because he's your uncle or someone, but he's given you money because you need it just now. Then we saw money lender, of course, tries to take a large amount. Regular banks which give you loan. You also have cooperative societies. Okay, now cooperative societies basically are made so that it benefits everybody. It is not so much that it is for earning a lot of money. Unlike the cooperative banks, the commercial banks naturally will charge slightly higher, and the cooperative banks don't charge very high rate of interest. Now here you can see in your book they have given lots of different examples of how loan can be got. So in that they have given you formal sector and informal sector. Now sources of credit, they have given you cooperatives and commercial banks as the first one. Okay, so which are the sources of credit? Let us see. In sources of credit, we already saw organized and unorganized, but there we divided it only into two. Okay, so here we have sources of credit. You can have cooperative or credit banks. Okay, so these can be credit commercial banks also. Okay, so that is one of your first source of income. The other source of income is from government, okay, and other formal sources. So you have government or formal sources. Next, you have professional and agricultural money lenders. So you have money lenders, which we already saw. Sometimes you have the traders. Traders, that means vyapar karne wale, who buy and sell. So they might give you loan. Sometimes they go to the landlords. A farmer who has a tenancy means he is paying rent and he is working on the land. The landlord is not working on his land. He is only getting the benefit of the work done by the landless farmer. So that farmer may go to his landlord and take loan from his landlord itself, or they might go to relatives to ask for loan. And if they don't have any relatives or friends, they might try some other sources. Okay, so now here cooperative banks, government, these are the formal ways. Informal ways or the unorganized sector, you'll find the money lenders, traders, landlords, relatives and friends. So the first option should generally be the first two, because that is the organized sector. They have a perfect system, they have a fixed rate of interest, less likely to be cheated. Money lenders might try to cheat you. Your landlords, sometimes you are at the mercy of the landlord. Now he has given you loan and he will tell you that when you finish selling your crop is ready, you have to sell it to me. He may not give you a good price, but you are forced to sell it to him because you have taken money from him. So sometimes even the landlord might try to take advantage of you. You might think that relatives and friends is a good option because then they may not charge any interest at all. But sometimes the friendship might break over money because you didn't repay on time. So the relationship might become strained or a little sour. So this is the best way to get your money or your loan. Have you understood so much? Now, cheap and affordable credit is crucial for the country's development. Now, why have they given this? If the country has to develop, there are many things that we have to develop. The agricultural sector, the industrial sector, the infrastructure, that means the roads, the electricity. And for all this, to create all that, you need loans. Money which is kept in the cupboard is not going to help. The money in the cupboard is not going to have children and increase. But if you put that money in the bank and that bank gives it to somebody else as a loan, with that loan, that money can be created into more money. That means not only will it earn interest, but it will multiply. It has a multiplier effect. Okay, so it is good to have a savings account, to have fixed deposits in the bank, and to inculcate the habit of saving. Saving will see your money grow. Today your money is a certain amount. When you start saving it and investing it, you will see how it grows. So you understood what is formal and informal credit. Now here in your book they have also given you the amount of loans taken by urban households, poor households or well-off households. So you'll find that the rich people have not taken that much loan and the poor households might have taken a large amount of loan. A lot of farmers, they just get burdened by so much loan that they cannot repay it. So they might take more loan to be able to repay the old loan, and they just keep getting more and more burdened with more and more loan. Today a lot of farmers are committing suicide because their crops are failing. Unfortunately, there has been a drought situation in some of the areas and the farmers commit suicide, and this is exactly the reason why. Because they have already taken loan and they don't know how to repay it. If they had taken it from a regular bank, the bank would have taken into consideration their situation, giving them more time to pay or reducing the rate of interest, giving them a longer period to pay back. Now, here they have given you, it is necessary that banks and cooperatives increase their lending particularity in the rural areas so that the dependence on informal sources will reduce. So in the rural areas, the first which we saw, cooperative and credit banks. If they increase their loans, then people will not have to go to the money lenders, especially in the villages. The banks are also given a kind of a directive principle as to whom they should lend to. Suppose there is a group of women who wants to start a cottage industry or a small cooperative store or something. The money which they need is more likely to be given. You want to start making beedies, okay, which is as bad as cigarettes. They may not give you the loan. So they are told to use their discretion as to whom they are giving the loan to. For what purpose are they going to use it? See, very simple. If suppose you were going to export things, a bank is more likely to help you because it's going to help our country. When you export things, you earn foreign exchange. While on the other hand, if you wanted money to start a business where you're going to import things, where our foreign exchange goes out and the other country earns more. So they may not give you the loan. So whether a bank should give loan or not, there are certain directive principles. Based on that, they give you the loan. That means for what purpose do you need it? What is your repayment capacity? And many other criteria based on which they give you the loan. Now, formal sector loans also need to expand. It also is necessary that everyone can receive this loan. You'll find that the loans are taken by the rich people. Why? Because they know how to read and write, they can fill the forms, they know the procedures, and they can show repayment capacity. The poor people who really need these loans, they should be able to get these loans. So you find that in the villages, they have started what is known as a self-help group. Okay? It's known as an SHG. That means self-help group. In a self-help group, you have maybe 20-25 people. and they all come together and they pool in their money. Every month they put in a certain amount of money, and whoever needs it among their group only, if suppose this person needs it, they give it to that person for a very low rate of interest. If the bank was charging 10%, maybe they will charge only 5%. And you find that the self-help group, the person who has taken the loan, invariably they return the money on time because they are part of that group. If somebody else needs it, they give it to that person pays the interest to the self-help group. This goes on for a year or two, and they have collected a sizable amount of money. With that, they can go and they can get help. The bank will realize that yes, this self-help group has tried to help itself, and the bank will then extend you some loan. This loan is given to the members to start something small on their own. The villagers are very smart. They realize that if all of us start the same thing, it will not help. So maybe one starts making pots, one starts weaving, one may start some pickle making industry, cottage industry at home. Somebody else might buy a stitching machine, a sewing machine, so that he can stitch clothes and he can sell, or he might start a tailoring unit. So each person starts a small unit with which they can earn. They have taken the money from their self-help group and at a very low rate of interest, and once they start earning, they repay the loan amount. So that is known as the self-help group. Okay, if regularly, now in a small way you can see in the urban areas. Have you heard of people having a chit fund or a kitty? Many of the women come together. Of course, now it has become more of a social thing where women come together once a month and they eat and they play games and they laugh and they enjoy themselves. But the idea behind it originally was that if 10 women are putting in 1,000 per month, their kitty, which collects, is of 10,000. Now she wants to buy a fridge. So what they used to do is, sometimes they used to pull out one person's name. 1,000 she may not be able to put aside. But when you know that no, I have to put it in my kitty, then you keep aside 1,000. And when she gets that 10,000 in a lump sum, altogether, she wanted to buy a fridge, or somebody wanted to buy a washing machine, or somebody wanted to buy something else for the house, slowly from their home savings. If they have got a certain amount to run the house, and a housewife normally puts away a little amount, she tries to save so that she can buy all these luxuries for herself. You may not understand what I am telling you, because you might say that we already have all these things. But at a point when you don't have it and you work towards it, you collect money and you save, and then you buy all these things. So that is also kind of a self-help group. The idea is that I can't put away money, I seem to not be able to hold on to money, I spend money a lot, and in this way at least I'll put aside a certain amount. In the banks also, they have a recurring fixed deposit, which means every month you put the same amount. When you feel that I earn so much and I think this is a comfortable amount that every month I can put aside, but I can't put a big amount in fixed deposit. So you can start a recurring account where definitely you know that that much you will be putting aside. It is not that you have to join a kitty, because that becomes more of a social thing, right? So with the bank also you can start a recurring account. Now these self-help groups, you will find that the women have become very self-reliant. Self-reliant means Atmanirbhar. They are now depending on themselves. Sometimes they may not have a husband because they are widowed. Sometimes they have a drunkard husband who drinks and spends all his money, or a husband who doesn't earn enough. So they can also contribute to the household. That means the husband earns a certain amount, and these women have started small units of their own which they can also contribute. So you find that the women have become very self-sufficient. Generally, stitching, making pickles, papads, all these kind of things are very easy for them to do. They are good at it, but they might need an initial loan to start all these things. Now here in the end, they have given you one example of the Grameen Bank of Bangladesh. Here in the Grameen Bank of Bangladesh, they have said it is one of the biggest success stories in reaching out to the really poor people, because they are the ones who need credit. So here we come to the end of our lesson, and I hope you have understood what money is all about. Money is very important in our life, true. Other things are also important. We mustn't give only utmost importance to money. But money, as we have known in the olden days, did not exist. Then later on, kings and all started making gold mohurs, coins. They started having their seals. Today we have paper money, we have plastic money, and we have all kinds of different mediums of exchange. We have seen the different ways that we can make the payments, right? We can make payment in cash or even by check or by a credit card or debit card. We also saw that if we need a loan, we could go to an unorganized sector or an organized sector. That means the organized sector will always be given first preference, though in the villages, even today, people keep on going to money lenders. Terms of credit, that means if you want credit or you want a loan, these are the criteria that the bank looks at. Okay, how much money you want or what is going to be the interest rate, etc. So these we saw are the terms of credit. And finally, we also saw the different types of places from where you can get credit. And in this, we saw which are the different types. Again, we give importance always to the formal sector or the organized sector. And the self-help groups that we spoke about, a lot of them, generally women, come forward to form these self-help groups. Men can also come, and you'll find them generally in the villages. Okay, that brings us to the end of money. Now, let us have a little idea about how people give importance to money. Have you heard the song? Money, 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 must be funny in a rich man's world. Aha, all the things I would do if I had a little money in a rich man's world. So I hope you have lots of money, pots of money.